Today we are going to talk about final expense, our burial insurance, and I just wanted to cover a couple of things pre-final expense and pre-burial insurance, why they're important, what you should think about while you're trying to understand, do I need to have a final expense insurance or not? Let's say you're turning 65 and you had life insurance with your employer and now you retired, and right now you're actually looking for enrolling into Medicare Part A, also have options, and you found out like you can get now Medicare Part B. You're at a point, it's called as initial enrollment period. It's called IEP, where you are in that 7-month window where you're looking for either should I go with original Medicare or Medicare Advantage. In this state where you are right now, let's say you choose Medicare Supplement Insurance. So then you get some kind of a plan, which is like Plan G, Plan N, or high deductible Medicare Supplement Insurance. So now you are covered with Part A, you're covered with Part B, you're covered with Medicare Supplement Insurance. And then your insurance agent has also asked you to review your prescription drug plan, which is Part D. So you are actually fully covered. You got 4 of them: A, Medicare Part A, Part B, Medicare Supplement Insurance, and prescription drug plan, which is Part D. You are 100% set from a Medicare and health insurance standpoint. Now, please pause for a second, and I'm going to ask you, while you are employed, you had your employer's life insurance. Generally, employer life insurance goes such as a multiple of your income. Let's say you are making $100,000 a year. So the employer gives you 2x or 1x of your gross annual salary, which is $100,000. Let's assume you had a $200,000 life insurance policy, but you have just retired. So you don't have that coverage right now from a life insurance standpoint, and you have just turned 65. Now, a lot of clients, my clients say, Nash, I don't need that 100,000 coverage. I need something smaller because my financial outlook has changed. Mortgage is paid for, cars are paid for, grandkids, they're all set, and kids are all set as well. So I don't need a huge $1 million policy. So that's where this final expense or burial insurance policy comes in. These policies are life insurance policies which act and behave like a whole life insurance policy. But the face amount or the coverage amount for the life insurance policy is kind of small, such as $50,000, $90,000, or $100,000. They don't go beyond that amount. A couple of things that happen with this policy is it's a whole life policy. So if you qualify for it, the premiums paid on this policy are level. And if you qualify for a simplified issue or a level benefit policy, you qualify for that. That's the best way you can actually streamline your budget and get on a plan which is like, let's say, $25,000 of a whole life policy. We call it as a final expense. Now you pay a fixed amount, a premium that's consistent, constant. So you get the coverage from the day one to, let's say, 100 years or 105 years. So the next 25, 35 years, you pay the same premium. Now, some folks say, I'm paying this much premium, I don't know if I can outlive the policy. Yes, that is a risk that there will be there. But even though if you outlive the risk, let's say outlive the policy, you have to understand what this policy pays for. It pays for, God forbid, someone passes away or you pass away, then it actually helps you with your funeral expense, cremation, or burial. Then it also helps you with last minute bills. When someone passes away, there's definitely some activities that have to happen based on the customs, based on the family and culture. But at the same time, there are certain things like credit card bills, last minute medical bills, if there are any legal costs associated with the death. So those things have to be taken care of. So this final expense policy, which I'm talking about, which is ranging from, let's say, minimum is $2,000, max is somewhere around $50,000 based on your age, or if you're very young, it can go all the way up to $100,000. So somewhere between $2,000 and the higher limit is less than $100,000. That's your coverage amount. For that, let's say you qualify for it and you qualify for a simplified or a benefit, level benefit. What it happens is, suppose something happens, like God forbid, like you pass away, your family will get a check for this amount, and whoever is the beneficiary that you select in the policy can actually use this money not only for burial expense, funeral or cremation, but they can also use this money that is actually to take care of afterlife expenses. This is actually afterlife expense policy. So it's very important. The reason it's important is because most of the seniors who are turning 65, they don't want to leave a legacy of bills, a legacy of expenses to their grandkids. They're looking for some kind of smart way to save money and not to carry a huge life insurance policy, but something that can actually make sure their afterlife expenses are manageable.